Hey everyone, welcome back to Corporate Decoder. Today, T. Rowe Price Index Trust Inc. just filed its semi-annual shareholder report, and I am seeing some very interesting numbers for the small cap index fund. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing gives us a clear look at where this fund is putting its money and how it performed over the last 6 months of 2026, and it tells a story about sector performance and the cost of investing. So first off, this is a report for the small cap index fund from T. Rowe Price. It covers the period from the 1st of January 2026 to the 30th of June 2026. They've broken it down into different share classes: investor class, I class, and Z class, which is pretty standard for mutual funds. Each class can have slightly different fees and investment minimums. The Z class, for instance, has zero costs for a hypothetical $10,000 investment, which is a big deal for investors. The investor class, on the other hand, has costs of about $16 or 0.29%. The I class is in the middle at $8 or 0.14%. This shows you how important fees can be. Even small differences add up over time. Looking at the fund size, it has total net assets of $487,229,000. That's a pretty significant amount of money, and it holds a whopping 1,990 different investments. This tells us it is a diversified fund spread across many companies aiming to mirror a small cap stock market index. Now, let's dive into what the fund actually invests in. The biggest sector allocation is healthcare at 20.1%. That's a huge chunk of the fund, showing a strong bet on that industry. Following that, financials make up 18.2%, and industrials and business services are at 15%. Information technology is also a significant holding at 14.1%. These four sectors alone make up over 67% of the fund's investments. On the lower end, we see utilities at 2.7% and materials at 4.2%. The other category, which likely includes various smaller allocations, is at 4.8%. This sector breakdown gives us a snapshot of where the fund managers see the most opportunity, or where the small cap market is concentrated. When we look at the top 10 holdings, it is interesting to see that even the top ones are a very small percentage of the total fund. Moog, Hut 8, and Viasat are each at 0.4%. Brightspring Health Services and Cytokinetics are also at 0.4%. MaxLinear, Argan, Financial, JFrog, and Riot Platforms round out the top 10, each at 0.3%. This means that no single company has an outsized impact on the fund's overall performance. This is characteristic of an index fund where diversification is key. Diving even deeper, let's look at the actual portfolio. Under common stocks, we see a massive list confirming that massive diversification. For example, in the communication services sector, they hold companies like Lumen Technologies with a value of $1,127,000. In consumer discretionary, under automobile components, we see Dana with a value of $460,000. Under healthcare, in biotechnology, Allocates is a significant holding valued at $1,324,000. Cytokinetics is another big one in that space, valued at $1,698,000. In industrials, under machinery, Esco Technologies is valued at $1,399,000. In information technology, Viasat is a major holding with a value of $1,721,000. And in semiconductors, MaxLinear is valued at $1,673,000. This just gives you a flavor of the companies within this index fund. Now, let's look at how the fund actually made and spent money in the 6 months ending the 30th of June 2026. Total income was $2,285,000. This income comes from dividends and securities lending. Total expenses were $120,000. That's a very low expense ratio, especially considering the size of the fund. The net investment income for the period was $2,165,000. But for an index fund, the real story is often in the realized and unrealized gains and losses. Securities brought in a net realized gain of $37,980,000. There was also a gain of $660,000 from futures contracts. So the total net realized gain was $38,640,000. On top of that, the change in net unrealized gain for securities was $40,480,000, and for futures it was $14,000. This means the fund experienced a significant overall increase in value during this period. The total net gain from operations was a huge $79,134,000. This translates to an increase in net assets of over $81 million for the period. This kind of gain is fantastic for shareholders. Looking at the balance sheet as of the 30th of June 2026, we see total assets of $508,433,000. Liabilities are much lower at $21,204,000. This results in net assets of $487,229,000, which matches the total net assets figure we saw earlier. It is good to see the fund is holding more assets than it owes. The net asset value per S-share is a key metric for investors. For the investor class, it is $21.04. For the I class, it is $21.14. And for the Z class, it's $21.15. This small difference between share classes reflects the different fee structures we talked about earlier. Even though the Z class has zero stated cost, the slight differences in NAV per S-share highlight the impact of expenses on overall returns. The report also includes a section on the approval of the investment management agreement. This is essentially the company telling us that they reviewed the performance and services of their investment advisor, T. Rowe Price Associates, Inc., and decided to continue the relationship. They looked at factors like the quality of services, investment performance compared to benchmarks, and the fees charged. They noted that the fund's total expenses ranked in the fourth quintile for the investor class, meaning it is on the higher end of expenses compared to similar funds, but the actual management fee rate was competitive. For the I class, total expenses were in the second quintile, which is more middle of the road. This is a crucial part of corporate governance, ensuring that the fund is being managed effectively and fairly for its investors. The biggest story here is the strong performance of the fund over this 6-month period, driven by significant gains in its investments. The low expenses, especially for the Z class, are also a positive for investors. However, the slightly higher expense ratio for the investor class is something to keep an eye on. The diversification across many small cap companies means the fund is not overly reliant on any single stock. The healthcare sector remains the dominant investment, indicating a sector-specific focus within the broader small cap market. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. The research tools I actually use are linked in the description.